Hello and welcome to CMC Markets and this quick look at the week ahead beginning the 23rd of January. And it looks like we're finally here. It's been a long time coming. Financial markets have had a while to get used to it. The day has finally arrived. It's been 73 days, over 70 days, since Donald Trump won the US election, and the phony war is now ended. The world has now got to get used to the fact that Mr. Trump will be the 45th President of the United States of America. Now, financial markets have rallied strongly since that day in November when Mr. Trump won the presidency, but they're now beginning to start to show the first signs of nervousness. And in the wake of his inauguration speech, I think the big question that investors are looking for, given the rather shambolic press conference that we saw a few days ago, is he going to put any meat on the bones with respect to the type of presidency that he will seek to govern the United States over the next 4 years? Will he be inclusive? Will he be statesmanlike? More importantly, how will he heal the wounds of a very divisive presidential campaign? More importantly, as far as financial markets are concerned, what type of tax reforms will he look to implement? What type of infrastructure spending will he look to embark upon? All of this is very valid. And taking that on further, what will he do with President Obama's legacy? Because later this week we will be getting the fourth quarter US GDP numbers. Now, in the third quarter of 2016, the US economy expanded by 3.5%, fairly decent number. Since then, we've had a US rate rise. We've also had a succession of Fed speakers, as well as the Fed chair, Janet Yellen, talking about the prospect of further rate rises going forward into 2017. Ultimately, that is dependent on the type of fiscal policy that Mr. Trump looks to announce over the course of the next few days. I think one thing that I think has become increasingly obvious over the past few days and weeks is the new president isn't afraid to wear what's on his mind. As a load of company CEOs have found out to their costs and their company's share price. So the inauguration speech is going to be particularly instructive in the context of what to expect over the course of the next few weeks. I think the tone is going to be very, very important. But importantly, I think it's really about expectations. Will Mr. Trump be able to deliver on all his campaign promises, given the rally that we've seen in financial markets since his rather statesmanlike acceptance speech on November the 9th, when Hillary Clinton conceded the the campaign. So that's what I'm particularly going to be looking out for this week. Some of the tone from Mr. Trump and his new appointees to the various posts in the new US administration. Have a look at the US Q4 GDP number, which is due out on Friday. That's expected to come out slightly weaker at 2.1%. And I don't think that's going to be unsurprising given the tightening of financial conditions that we've seen since the November vote. But ultimately, I think there's going to be an awful lot of focus on that and what Mr. Trump intends to do with Barack Obama's legacy. One of which, of course, is the Affordable Care Act. What else am I looking at this week? Well, we're also got UK Q4 GDP, and I think there's widespread optimism about how that will come out. We've seen a raft of fairly decent economic data over the course of the past couple of weeks. Yes, inflation has pushed to a 29-month high, but unemployment is still at an 11-year low. And I think more importantly, average weekly hourly earnings are still trending higher than the current rate of inflation. Yes, the gap is narrowing, but more importantly, I think as long as that gap stays in favour of the wages column, then ultimately any slowdown that we get to see in consumer spending is likely to be somewhat mitigated by that. Also keeping an eye out next week for a host of PMIs, German and French flash manufacturing and services PMIs. They're going to be particularly important given the very dovish tone that Mr. Draghi adopted at the last ECB rate meeting. Will we get further policy divergence there with respect to the data out of the US and the Eurozone? I think more importantly, I think what will the pound do, given that Mrs May has finally announced her Brexit plan? Certainly I think if we look at the way the pound has performed against the dollar over the past week or so, it does appear on the face of it to have carved out a potential base around about the 120 level. After all, if the announcement of a hard Brexit isn't enough to push it below 120, then really you have to ask the question, what will? So I think we're at a bit of an inflection point on the pound against the dollar. There's a big support level around about 120. There's a big resistance level around about 124.40. So we are sort of trading lower in a slightly wedge-like, triangular-like formation. I think the key test now is where we go from here. Certainly looking at the pound against the dollar and looking at the weekly chart, I think if we can hold above the 122.5, 123 level, then potentially we've got a bullish weekly reversal on the weekly candlestick. That does bode well for a little bit of a move higher and back potentially towards those highs that we saw towards the end of last year around about 128. As far as US markets are concerned, we have been trending lower. We've closed lower for the last 5 days in the Dow Jones. What will the Trump presidency bring forward with respect to investor sentiment towards US equities? There is a perception that potentially they are a little bit expensive. Certainly looking at the direction of travel with respect to these candles on the 4-hour chart, the direction of travel does appear to be for a slight correction lower. Will that be borne out in the wake of the Trump inauguration speech? We shall have to wait and see, but at the moment I think there is potential for a little bit of a correction given the numerous attempts that we've had at the 20,000 level and the numerous failures. So that's it for this week. Thanks very much for listening. This is Michael Hewson talking to you from CMC Markets.